One of the best ways to beat the stock market, to pick winning stocks, is to start by investing in the sector of the market that is hot. And so each week I do a little sector analysis for my own trading. This week I'm going to show you how I do it and the two tools that are free to use that I utilize to do this analysis. So how do we find the next hot sector of the market? What I like to do is first use a tool called Finviz.com, Finviz.com. And on that website, they have a tool called a market map. And I then look at the exchange traded fund version of the market map and look at the 1 week performance. I'm looking for the sectors of the market that have done really well for the week or those that have done really poorly. And the idea here is I look at where there's strength, where there's weakness, and then assess using the charts at my website, Stockscores.com, to determine if they have a good chart pattern or not. So for example, if we jump over to Finviz now, you can see that this past week there was strength in biotech, there was strength in real estate, Brazil had strength, China had strength. There was weakness in semiconductors and financials, most notably. So then what I can do is take these symbols, because these are the symbols for exchange traded funds, and I can jump over to the Stockscores website, punch up the symbols, and do analysis of those charts based on short-term, long-term time frames. So let's begin with the chart for Brazil, EWZ. And the reason I want to focus on this one first is because it is a group or a sector of the market that has been doing well for a few weeks and is actually a good example of what we want to look for the next hot sector. So here is EWZ, Brazil iShares, and I want everyone to notice that the downward trend line was broken about 3 months ago. And so that's one example of a good chart pattern. This is something called a falling wedge, where the tops are falling quicker than the bottoms. When the tops are falling quicker than the bottoms, it means that the momentum to the downside is slowing. The buyers are starting to bargain hunt, the sellers are losing their motivation, and that's why you get faster falling tops but slower falling bottoms. It culminates in a break of the downward trend line, and that's actually a pretty good reversal pattern. So that's an example of something we'd want to look for when we're looking at the sectors of the market that have done well in the recent week. Now, EWZ did well this week, but it's not a time to buy this market because it was a time to buy the market 3 months ago when it first broke that downward trend line. So we do have some sectors that were showing strength last week. Let's take a look at some of them. We can start with IBB, which is the biotech sector. I'm going to take a look at the 3-year weekly chart. And you can see that the biotech group has done well over the last 3 weeks. However, it has not managed to yet break that downward trend line. So really what's happened is there was too much emotion to the downside. A little bit of panic selling caused the market to run away from its trend line. And when prices run away from the trend line, they usually come back up to the trend line. So we're getting a nice 3-week bounce in biotech, and I've noticed that there's been some strength in the biotech group the last few weeks. But I think it's still too early to call this the next hot market. Now, this is the 3-year weekly chart. We can also do this analysis on a much shorter term time frame. If you're a day trader, what's happening over the 3-year time frame doesn't really matter so much. We're more concerned with what's happening on the hourly time frame. And so to look at the hourly time frame of a sector, what I like to do is click on the 1M for 1 month, and then the 60M for 60 minute. Now I can see that there has been strength in biotech for a couple of weeks, and it began when this downward trend line was broken back on March 16th. We had a double bottom, we broke there, we had a good little run higher, and then we recently broke another downward trend line there. And so in the short term, the biotech sector looks good. And if you're a day trader, there's been some decent opportunities in biotech last week. Now we can look at Other groups, for example, the SOXX was the semiconductor ETF, and it had a really bad week. So why would I want to look at something that's really bad? Well, sometimes when there's a lot of weakness, market groups get oversold. And by oversold, I mean they run down and away from their downward trend line. And what happens is they'll usually make a bounce back in the short term. So this is not something you would want to use if you are a longer term investor. But if you're a short term day trader, swing trader, then you can look for those groups that get really oversold and look for a sign that they're breaking that long or that short term pessimism. So to do that, I've pulled up the chart of SOXX, and I'm going to look at a really short term chart, a 10-day, 15-minute time frame. There I can see the weakness over the last 3 days. I can see that we went parabolic to the downside, and I'm also noticing that there's a little bit of a rising bottom building there. If we can break the downward trend line on this time frame, which again is a 10-day, 15-minute chart, next week we could get a little bounce back into this zone, and for a short-term day trader, swing trader, there may be opportunities to trade that bounce back. So this is a sort of a top-down approach to analysis. I try to do this on my own each week, looking at the sectors that are strong, the sectors that are weak, looking at them on Finviz first, and then checking the charts on Stockscores, and just applying simple chart analysis. Now, if you would like me to do more of this in my weekly market analysis video, click on that like button, the thumbs up, and the more people that like it, the more I will try to work this into our regular weekly analysis. And let's do that now, the regular weekly analysis. And as always, I want to start with the S&P 500, and we use the ETF SPY. Punch in SPY. I'm going to begin with the 1 month time frame, and there I can see that on the 1 month time frame we had a nice comeback rally, a little bit of weakness this last week, and so I'm going to say it's neutral to slightly bullish. I like that the trend is up. I don't like that the trend was broken on Thursday. We may just go sideways here in the short term. So neutral to slightly bullish in the short term for the S&P. In the long term, very similar situation. Long-term upward trend line was broken 3 months ago, and since that time we've sort of been drifting and waffling. The upward momentum has slowed. I think that this market probably goes sideways in the next little while. However, what I'm concerned about is if we were to roll over and break down through 420 from a falling top, that would be a strong negative signal. This hasn't happened yet, but I always like to give you things to watch for. And so on the SPY, if you break down through 420 from that falling top, then we could see some weakness. In the meantime, I think we're going to rate this neutral long-term on the S&P. QQQ, the Nasdaq 100, which represents tech stocks, 3-year chart, you can see similar situation, perhaps a little bit more volatile. Upward trend was broken. We've pulled back, broke the pullback 3 weeks ago. Are we going to rally back to the highs? That would be good. If instead we roll over and break down through that support there, that would be bad. For now, we'll give it a neutral rating, slightly negative rating. Let's go to the IWM, which is the small cap stocks in the US. And very different chart here. This is the daily time frame. You can see the downward trend line has been broken after a sort of a triple bottom. That's a good thing. We have started to build some upward momentum. And again, a lot of biotech stocks in the IWM. We're seeing the biotech sector sort of firm up. It hasn't been really great yet, but it is getting better. I've also noticed that retail traders who are kind of down in the dumps over the last few months, they've started to perk up in March and April. You're seeing meme stocks like AMC, GameStop start to come alive again. We're seeing a little bit of life in crypto. We'll talk about that in a moment. And we're seeing, again, a little bit of life in those stocks under $10, $15. That's the kind of stocks that retail traders like to trade, and we're starting to get better. And hopefully, if the seasonality is any guide, hopefully we'll get a good run April, May, June. That's sort of a typical pattern each year for those small cap stocks. All right, let's take a look now at the Canadian market. T.XIU is the ETF for the TSX. And you can see here that this market has broken out to new highs. Now remember, the TSX is heavily concentrated in commodity stocks, and that's why it does not look nearly as weak as the S&P 500, as the Nasdaq 100, simply because the TSX has lots of oil and gas stocks, lots of mining stocks, and those groups in the market are doing well. We'll look at the commodities in just a moment. Let's take a look at the TSX Venture, which is the microcap stocks in Canada, the penny stocks, if you will. And you can see that that group was really doing quite poorly for a number of months, but halfway through March, we broke the downward trend line from a triple bottom, much like the US small caps did. The Canadian small caps also starting to turn around, the retail traders getting a little more excited, and it's seasonally what happens. Usually they are a little bit quiet January, February, and then they perk up again in March, April, May, sometimes into June. All right, let's take a look now at the commodities. We'll start with gold, GLD, and you can see that gold really went parabolic on the attack of Ukraine by Russia. Things have settled down a little bit. Here's your upward trend line. That's where we should pull back to. I think in the short term, I'd be a little bit cautious with the precious metals. I think people got pretty excited. They chased them higher. Things are now, the emotions wearing off, and we're seeing that group pull back. The long-term picture is not bad. Short-term, I think we could see a little bit of weakness. USO is the ETF I like to use for oil, and it's building what's called a pennant pattern. So here is your pennant. The trend up into the pennant indicates that the likely trend out will be up as well. It went parabolic, and anytime a trend goes parabolic, I usually think that we're going to be in for a period of sideways trading. That's what's happening right now. So the daily chart for oil looks bullish, but taking a pause, taking a breather. Let's take a look at the 3-year weekly, the long-term chart for oil. And there you can see just how far above the long-term upward trend we still are. That means that there's lots of emotion still in the oil market. We could still pull back further. So I'm not eager to initiate new positions in the energy sector. I think if you have stocks you own and they're holding up well, hold them. But to buy new oil stocks, unless they're really junior stocks that just sort of come alive with a good chart pattern, for the most part, it's a little bit of a chase to be buying these now. I think they're holds, but I wouldn't chase them here. All right, let's take a look at some of the currencies. UUP is the US dollar. Usually, the US dollar and commodities move in opposite directions. It's not the case right now because with the military conflict in Ukraine, there's a flight to quality. People are going to gold and precious metals. There is a demand outstripping supply of oil, so oil has gone up. And there's been a flight to quality where money is moving into US dollars, and that's why the US dollar has done fairly well over the last number of months. There is also tends to be an inverse correlation between the US dollar and the Canadian dollar. And if you see a chart like this where the US dollar is going up, you would expect the Canadian dollar to be going down. Well, it's not actually happening that way. And that is because the Canadian dollar is heavily based on commodities. So it has gone down, but it hasn't gone down as sharply as the US dollar has gone up. And in the last few weeks, we've seen the Canadian dollar starting to firm up. It's actually managed to break this little downward trend line. And so I think the Canadian dollar has a little bit of potential to move higher. Now we also want to think about some of those cryptocurrencies that I know many of you like to follow. Here's the chart for Bitcoin. Downward trend line broken, building some rising bottoms, starting to build optimism. It's looking better. I don't think it's a great chart yet, but it is stabilizing. And so maybe not a buy signal on Bitcoin, but certainly not a sell signal either. Bitcoin is firming up, stabilizing. Let's take a look at Ethereum. ETHE is the symbol for that. And there you can see a similar situation, downward trend line broken, build of a rising bottom, starting to gather some upward momentum. You can see the stock scores are starting to pick up, getting towards 60 again. Sentiment stock score is at 60. Notice that when it was moving higher, sentiment stock score was high. When it started to trend down, our stock scores fell lower. So it's a good way to determine whether the buyers are in control or the sellers are in control. Buyers are in control. You'll see that sentiment stock score sitting at 60 or higher. All right, the final chart I want to look at this week is TBT. TBT is an inverse ETF on the US Treasuries. So if interest rates are going up, that means bond prices are going down. If bond prices are going down, this inverse ETF, TBT, will go up. So essentially, if the inverse ETF, TBT, is going up, that means interest rates are going up. Looking at this chart, you can see that interest rates have been rising for the last 3 months. Ever since this downward trend line was broken, we've seen interest rates rising. This week, interest rates fell a little bit. They'll probably come back to this upward trend line where they'll stall, and we'll see if they bounce. Now, a lot of people think that the interest rates you pay on a mortgage are determined solely by the central bank. So the US Federal Reserve, the Bank of Canada, they have interest rate policy, and that affects interest rates, but it does not actually determine the interest rates you pay. Those are more based upon the bond market. So if you ever want to get a sense of where your mortgage rates are going, just take a look at something like this, TBT. This is going to be more closely related to US interest rates. If this is going up, interest rates are likely to rise. And if you're looking to lock in a mortgage, you may want to do that sooner than later. All right, well, I hope you've enjoyed this week's analysis. We've had a look at sectors. If you've enjoyed that, click the like button. We'll try to work that into our weekly analysis. Where do you think the market is going? Give me your thoughts. What sectors do you think will be strong? What sectors do you think are risky? I'll leave it at that. Hope you've enjoyed it. Subscribe to the channel, hit the like button, and most importantly, trade well.